Hi, everyone, and welcome. My name is Suzanne, and I'm the First Impression Specialist here at Stewart Group. Before we begin, I just wanted to let you know that today's session is a pre-recorded webinar so that we can offer you guys a smooth and uninterrupted experience today. We've been having some technical issues on some of our previous live sessions, so we're hoping that this delivers everybody a much more enjoyable experience. Not to worry though, Alex is logged in and live in the chat and is here and readily available to answer any and all questions that you guys have and come up with during today's session. And with that, let's get started.
So I'm here with Rob Knight, Senior Founder, Wealth Advisor, Stewart Group, Alex McFadden, Associate Portfolio Manager. And yeah, today we figured it's a timely topic for entrepreneurs, business owners, those specifically with incorporated businesses. Tax deadlines coming up, and it's always a bit of a stressful time. And you know, I think we can agree every entrepreneur we know has a messy drawer somewhere, full stack of unopened envelopes on their desk, and you know, at this time of year specifically, probably pretending that they don't exist, those files don't exist, while trying to decide if it's worth bugging their accountant or not.
Yeah, you absolutely. I know personally my system is I send everything to the accountants and let them worry about it. I just have to worry about paying the accountants. But being an entrepreneur does mean that you're juggling stuff all the time. Nobody went into business to do regulatory stuff like file your taxes. Somebody wanted to build something, make something, sell something. That was why they went into business. And every entrepreneur is exactly the same.
Yeah, it's just a necessary evil. That's part of the business. But like you said, as a business owner, you want to be worried about working on the business, not those little details. And you know, we find that there's a million priorities that business owners are juggling, and at the end of the day too, tax time isn't necessarily just about managing receipts and forms and all of that annoying stuff, but it's also a planning opportunity. And even though Rob and I aren't necessarily tax preparers or tax experts, accountants, we do spend a lot of time helping business owners understand what those numbers mean and what maybe they can do differently. And sometimes it might not be for this year, maybe planning opportunities moving ahead for the future.
Yeah, absolutely, Alex. Look, sure, we're approaching the June 15th deadline for the 2024 tax filings, but really what we're going to talk about today should help you for the 2025. And one of the things that we see almost everywhere is, was that a personal expense or was that a business expense or was it a little bit of both? And do you have documentation for it to prove that it's a personal expense?
Right.
How often do you see this?
Yeah, quite often. I think it's not something that's about right or wrong. It's a lot of times entrepreneurs, they don't really know necessarily what is a personal expense, or they're not necessarily filing properly the business deductions appropriately. And it just gets messy. And it's not, again, like I said, it's not something that's about right or wrong. It just gets messy and becomes harder for your accountant to even file.
Yeah. I mean, and here's where technology can be your friend. If you get in the habit of every time you spend money, ask for a receipt, and almost everybody has a phone, and there are lots of programs available right now where you just take a picture of it and it basically automatically goes right into an accounting system.
Right.
And you take 20 seconds and say, okay, this was a business lunch, or no, you went out with your wife.
Yeah. And
no, it's not a deductible expense. And it just makes it so much easier, because if you just collect, you got your truck and you've got your, the center console, and it's got a ream of receipts, and then you have to remember, oh, what was that?
Right.
you're gonna be making it up as you go.
It's a lot easier to reimburse yourself with the proper documentation, right? So, and that's one of the things we'll do. We'll help categorize things before it gets to a tax team. We'll be in touch with the accountant that you work with. It's one of the things that we do, right? We want to be fully engaged in the planning around your corporate situation, around your personal situation, and yeah, that entails, you know, making sure that your receipts, those types of things are categorized appropriately. So we can define what's deductible, what's reimbursable, and at the end of the day, what's just clutter.
Yep,
right?
absolutely.
So one of the other things we get often asked is the age-old question, salary versus dividends, and what they should be taking. And Rob, you've been a specialist with corporations and business owners for 30 plus years. So what's your take on that?
Like most corporate tax situation, the answer is it depends. It depends on what other assets you have, what other revenue producing items that you have, whether it be an investment account, you know, what type of earnings is your business producing, how much tax are you paying there? Because as an owner, your decision to take salary or dividends impacts the tax status of your corporation.
Right.
If you take a dividend that is lower taxed personally, but causes higher tax at the corporate level. If you take salary, it causes higher tax at the personal level, but gives you certain deductions that you can avail yourself of, but causes lower tax at the corporate level. And oftentimes these decisions need to be made on a semi-regular basis, maybe not every year, but you generally want to be on a path in advance of starting your year, knowing what type of income treatment you're going to trigger. This way you can control both your corporate tax levels and your personal tax levels. And again, I can't reiterate enough, you want to work with a tax partner that not only prepares and does the compliance work on your returns, you want to have some planning work in there as well.
For sure. Yeah, and like you said, there's both offer benefits and advantages, and come with different things, right? By drawing salary, you're able to contribute to RSPs, but at the same time, you're also contributing to CPP, right? So there's some advantages and disadvantages to both. And I think you hit the nail on the head. That's why working with a planner and an accountant is key. So kind of moving into the RSP, like what can a corporate business owner do about tax sheltered accounts? What's your thoughts on those?
Well, again, it depends. So if you've been paying yourself a salary, then you definitely have RSP contribution room building up. A lot of people think the value of an RSP contribution is the deduction, and nothing could be further from the truth. The value is the tax-free compounding over time. That's, you know, if you're a 30-year-old, 35-year-old, and you got a 30-year tax sheltering, that's the real value. And this is where the plan and the, you know, a financial plan and the tax planning need to go hand in hand. You can't have them living in isolation of one another. Tax-free savings accounts are another area that we see a lot of clients asking us about. But if it's a corporation and the owners have been taking fairly low income amounts out of the corporation, leaving capital inside the corporation and investing there, we may not want to trigger tax at the corporate level in order to be able to get money into personal hands in order to fund the tax-free savings account.
So if they're sitting in higher cash inside the core, look at using the core investing inside the corp as opposed to letting it sit in cash and having that passive income inside.
Yeah, I mean, we do a very similar test with corporations that we do with individuals. We separate the money into two main chunks. Money that you're gonna need in the short term, don't take any risk with it, invest it in the highest short-term guaranteed rate of return that we can get. Money that we don't need in the short term, for that, we want to invest in things that can go down,
Right.
i.e. probably equities. The reason we want to invest in things that can go down, if they can't go down, they can't go up. And we want things that can go up in value over time. So it's the same conversation. If you think of your corporation as another entity or person, that'll help you make the decision.
Gotcha. And again, I think a lot of the theme around some of these topics comes back down to trusting your tax partner and planning. A lot of it comes down to planning and having a bit of a roadmap, understanding what the right solution is for you.
Yeah, I mean, absolutely. Once again, entrepreneurs got into business because they had a thing that they do well. Probably tax planning, estate planning, financial planning, investment management is not that thing.
Right.
Pay for advice. It's worth it in spades.
For sure. And just kind of, I guess, piggybacking off of the high corporate cash, see a lot of business owners a lot of the time sitting in high corporate cash, and does it make sense to go into personal and invest in RSPs? But what about for those who are thinking about making a large purchase, like equipment, vehicles? There's still some tax strategies that they consider there, correct?
Definitely. There's lots, if you have cash in your corporation, there's lots of opportunities to optimize that cash. Having cash that is liquid, it doesn't have to be sitting in a bank account. It could be in a short-term note, government bond, short-term government bond, something that's very liquid and very guaranteed. Gives you the ability to make a decision. Should I accept the vendor's financing plan, buy it for 7 years at 0% interest?
Right.
Or do I put some capital down on this purchase? Oftentimes, equipment vendors make their money on the financing plans, and they won't give you, it used to be you walk into a car dealer as an example and want to buy for cash, you could get a good deal. That's not the case anymore. You get your best deal by accessing their capital.
Correct. Yeah, absolutely. And there's also capital cost allowance too, right? That would help lower taxable income. And again, our planning software takes all that into account, and those are things that we've done for clients, farming clients, buying new equipment for the farm, understanding how CCA can help them lower those taxable income. And I guess the really the last tip here, just trying to be careful of everyone's time. Business owners, we know you don't have a whole lot of time to watch these videos. So last tip, using this tax deadline as a trigger for bigger planning. I know you've always used metaphors and have some great stories when you talk to clients. I don't know if I've necessarily heard you say this line, but probably something along the lines. And you're a great teacher for the advisors in the office, and I know that's a career you wanted to get into before you became an advisor. I guess, do you ask clients in a way what the tax season taught them this year or in past years, or some sort of framing of that?
I do. I think most people have an aversion to pain and discomfort, and I ask them to focus on, what did you hate about this tax season? And what can we do to make it better for next year? As I said at the beginning, this is sort of in advance of the June 15th deadline.
Right.
Well, we're really working for June 15, 2026.
Correct.
And the things that we do now will make it easier next year. There's still probably a few little things that you can do.
Yeah.
You know, and your tax advisor can help you with that. But setting up good habits going forward is the way to be ultimately, I don't know if stress-free is a real thing, but less stress.
Less stress.
And, you know, more ease and more confidence that you're making the right choices in your expenditures.
For sure. And, you know, there's always going to be things that are outside of our control. Like there's always going to be mandates that are changing or bills that are changing, right? You know, lifetime capital gain exemptions ever changing. There's updates to the capital gains inclusion rate that's still kind of up in the air. AMT changes. Those are all things are always going to be evolving in the corporate space.
Absolutely. And as an entrepreneur, it's unlikely you have time to focus on the minutia of each of those changes. This is where a strong advice team is invaluable. You know, in May of this year, we had a number of clients that, you know, rushed into selling in order to avoid high inclusion rates, only to find out, oh, I didn't need to do that. Now, the decision to do so was probably appropriate in May, and that's what was being recommended.
Right.
But we need good advice providers to help us make those decisions.
Right. And at the end of the day, you know, we're here to help bring everything into focus. And, you know, we've said it a lot in other podcasts, webinars, and client calls. You know, what we're really looking to do is connect your goals, your pains, what you're looking to achieve, and bring it back down to your why, your personal goals, and make sure you're building towards something that, you know, matters to you.
I mean, yeah, I'm sorry for cutting in, but your business and your personal life and financial goals should be aligned.
For sure.
And if those things are not helping you achieve your why, we probably need to adjust something.
Yep. No, absolutely. I mean, with that being said, I mean, hopefully there are some good takeaways here. If you feel like you're drowning in tax documents, or not sure what half the slips mean, just know you're not alone. You know, this isn't really about shame at all, or right or wrong. It's about clarity, just giving you some tips, and clarity is what we're here for. Like I mentioned off the top, we don't do taxes, but we do help make sense of your finances and your goals, and that's really what we're looking to help with. So.
Yeah, I mean, we work with a number of good tax advice specialists, and regardless of the size of your business, we will have a resource for you if you are in question as to the quality of your current advice stream.
For sure, absolutely. Yeah, with that being said, if anyone has questions, there will be some contact information at the end of the presentation. And again, this isn't meant to be salesy, just some advice. And if you have any questions, we're open. We're here.
Great.
Thank you.
Thanks, Alex.
Yeah.
All right, everyone. Thank you so much for tuning in today and listening. We truly appreciate everybody's interest and continued support. If you've attended any of our previous events, we want to send you a special thank you for your patience as we worked through some of our technical challenges and issues from those events. We are always looking for feedback. So if you do have some to share with us, big or small, please don't hesitate to reach out to anybody here at Steward Group. You can send an email to clientservice@stewardgroup.ca. You can reach out to your advisor and they'll pass along the information. Yeah, thanks so much again, guys, for watching, and have a great day.